It's crazy. Like if we, the best way I explain the vacancy rate to people and to your listeners, Tab, would
Mm.
be for 1.5 vacancy rate, that represents for every 100 homes, only 1.5 homes is available for lease. That's
Right.
crazy. That's just
That is
crazy.
crazy.
That is crazy. But yeah, in terms of supply, Melbourne's never been so undersupplied in the last 20 years.
Yeah.
That's a fact.
You're listening to Property Investor Tales, stories from the front yard.
Hello and welcome to Property Investor Tales, stories from the front yard, where I get to speak to property investors from around Australia about their investing journey. My name is Tabitha Bright and I'm the head of advising here at Positive Real Estate, where we help people build wealth through property. With over 10,000 clients across Australia and New Zealand, there are some incredible stories to tell, which hopefully make your investing journey that little bit easier and will inspire you along the way. So today I'm interviewing Riley McNee, our head of acquisitions here at Positive Real Estate, and we discuss why you need to buy in the Melbourne market today. We hope you find this valuable. I hope it gives you some incentive to get out into the market and start your investing or add a Melbourne property to your portfolio. Bye for now. Alrighty, well, welcome to another episode of the Property Investor Tales Stories from the Front Yard podcast. Quite a mouthful to get out. I'm Tabitha Bright and I'm the head of coaching for Positive Real Estate. And with me today, I'm super lucky. I've twisted his arm. His name's Riley McNee. I always say McNee. It's McNee, isn't it?
It's McNee.
It's McNee. I don't know why I always say that. It's like neighing a horse. You poor man. Anyway, I digress. Now I've teased Riley. With Riley today, and he's head of our acquisitions team here at Positive Real Estate. So him and his team are responsible for heading out, getting the deals, making sure they negotiate hard, they understand why clients are buying and what time of the market, what cycle, what to expect, and all of that stuff. They have to do loads of due diligence, tune into the property economics, etc., etc. So he is quite the man today to be talking with me about the Melbourne market. So I will pre-frame Riley in twisting his arm today. He does have children at home with the school holidays. So if there's a bit of gesturing or a little one pops in, that's just all par for the course. We're family friendly here at Positive Real Estate. Thank you, Riley. Welcome to the podcast.
My pleasure, Tad.
It's Tad and McNee.
It's Tad and McNee. My pleasure, Tab. You know, I'll always do anything for you, and it's a pleasure to join you.
Thank you. Well, we've got off to a great start. It could have been way worse than Tad. So, you know, we're I think we'll wipe the slate clean and start fresh. So Tab and Riley, we'll get that clear. But I'll quit with the comedy show. So I just really did want to talk about the Melbourne market, and I'll do one more pre-frame and then I'm going to hand to Riley. In October, we started talking really heavily about getting into the Melbourne market, and that was October 24. And the reason for that was we knew that the fundamentals have been strong for Melbourne for a long time, and the main thing that has stuffed the Melbourne market, much like the Brisbane market back in 2008 through to when it actually kicked off in sort of 2018, it's really about sentiment and everything that means that a property market will move is there for Melbourne. And the thing that has held it back has been sentiment over the COVID period, some politics, but it doesn't change that the fundamentals are strong. So Riley, tell us what you're seeing in the Melbourne market. Tell us what's happening. What are the signs showing us now? Is the market moving? Where would you put your money in Australia now that I'm saying Melbourne?
Well, there's a lot to unpack there, Tab, and I think history leaves clues, and if we circle back and we look at how our capital cities have performed over the last 10, 20, 30, 40 years, it's always been Sydney and Melbourne that have, they're the alpha markets.
Yeah.
They've always led the charge in terms of capital growth and rental growth. You hit the nail on the head. What's happening in the Melbourne market at the moment. There's a real lack of sentiment. There's a real lack of belief in the Melbourne market, and I think that's really the key fundamental that's
Mm.
missing from the Melbourne market taking off. And you asked, where would you be parking your money at the moment? Well, I'm parking it myself in the Melbourne market, and we're going to chat
Mm.
a little bit about that today. But
Yep.
I think Melbourne's at a really interesting time, and I think the smart money at the moment should be shopping in Melbourne because there's
Yep.
great value in the market, and we can chat about, some of the what does that value look like. But
Yeah.
I think, as I mentioned, history leaves clues, and we can talk about supply and we can talk about the infrastructure and we can talk about population, and we will today because
Mm.
there's obviously some key drivers there that we need to discuss. But, if we circle back and we look at, when Sydney really took off after the GFC,
Yeah.
and I was working in the Sydney market at that point in time. And what we saw in that point in time was there was a lot of infrastructure being spent in Sydney,
Mm-hmm.
and cash rate was dropped off the back of the GFC. And to use Sam Saggers' famous phrase, when money flows, property grows, and the property
Mm.
market took off. But it was really driven from the bottom end up. There was the last time there was an influx of first home buyers into the Melbourne market.
Yeah.
Now, if we go from Sydney and then look at the Brisbane market, Brisbane didn't have really any growth for around about 18 years. It was
It's
flat.
crazy.
It
Yeah.
was crazy. And you and I was your PC in that period from 2017 to 2018, and we had some cracking deals where we're really able to, twist the developers and vendors' arms, and we were able to get cash rebates and buy good quality assets in great locations.
Yeah.
And
Discounts.
what discounts, you name it.
Yeah.
And what was lacking in that period of time was belief, market
Mm.
sentiment.
Yeah.
And we could see the wheels turning. We could see the infrastructure the dollars being spent in infrastructure. We
Yep.
could see the population starting to grow larger in the
Flow.
Brisbane
Yep.
market.
Yep.
Exactly right. Now, Brisbane had, I would say, well, not without a doubt, had a lot more supply in that market in 2018, 2019.
Mm.
But what we saw in Brisbane is COVID came along again, the cash
Yeah.
rate was dropped, and then the first homeowner grants kicked in, where
Yeah.
you were able to get a $25,000 first homeowner
That's
grant,
right.
and then bang, the bottom of the market
Yep.
turbocharged the growth in that market, and we're now still seeing massive growth in the top end of the market
Mm.
as well. So
Mm.
I look to where Melbourne is today, and
Mm.
going back to the last 50 years, Sydney and Melbourne have always been, the two alpha markets.
Mm.
Today, Melbourne's median house price is
That's
$780,000.
crazy.
To put that in perspective, Sydney's 1.5,
Yes.
Brisbane's just under $1 million,
Yeah.
Perth's 850,
Yeah.
and Adelaide's 840.
I
So
know. We're
it,
the
that's
only
crazy.
city we're ahead of is Darwin, I think.
Yeah, it's mind-boggling for a city of five
Yeah.
million people.
It's crazy.
And we're starting to see some early movement as well. Like we're
Yeah.
seeing rents rising, right? We're
Yep.
seeing the vacancy rate across Melbourne at the moment is 1.5%.
Right.
Population's booming.
Yep.
A lot of infrastructure being spent, and I'll go on about that a little bit later. But
Mm.
definitely, without a shadow of a doubt, the value is in Melbourne currently in
Mm.
Australia, with hands down.
So let's break some of those stats down for people because you and I
Yeah,
talk this stuff every day, so it's normal for us.
yeah,
So when we say a vacancy rate of 1.5%, a
mm,
balanced vacancy rate, so where there's enough supply and enough demand, and landlords are happy because they're getting their place rented in 4 weeks, tenants are happy because there's plenty of stock on the market to choose from, is around what, 3%? Yeah,
yeah. That three
around
percent is the equilibrium.
3%. vacancy is a balanced market, folks. And you can find out this data. There's free data which you can look at and go and find for your own suburb, your own city, whatever, is sqmresearch.com.au, and go under free data and look at vacancy rates. It's quality data. It's rare that you get good quality free data, but this is good quality data. And so 2% is considered a tight market. Under 2%, so what Riley's saying is the whole of Melbourne market averaged out is 1.5. Guys, that's under a tight supply. That is what is known as a critically supplied market. And we were talking last night with some of the team from like a major developer here in Melbourne, and tell me what they were saying about the amount of supply of units that came on in 2024, because that was crazy.
It's crazy. Like if we, the best way I explain the vacancy rate to people and to your listeners, Tab, would be for 1.5 vacancy rate, that represents for every 100 homes, only 1.5 homes is available for lease. That's
Right.
crazy. That's just
That is
crazy.
crazy.
That is crazy. But yeah, in terms of supply, Melbourne's never been so undersupplied in the last 20 years.
Yeah.
That's a fact.
Yep.
So to put it in perspective, in 2017, for the last 15 years, Melbourne's had to produce around about 15,000 apartments annually
Yep.
to match the forecasted population growth. So it's in line with the growth rate of the city. 2017, there was 20,000 apartments that came to market. In 2024, there was 4,000. So a massive drop off.
4,000.
4,000 apartments were produced, sold, and in this year alone, in Melbourne Metro, there's only been 780 apartments completed.
That is crazy. And can I
Wild.
add to that and say that we often tap into the information from Dr. Andrew Wilson, who's a property economist. And he's regularly, rolled out by Channel 9 and all of those guys to talk about the property market, and for whatever that's worth. But he is highly accredited and well thought of. You can Google him, Dr. Andrew Wilson. And the number I have here is the net migration into Victoria, into Melbourne, for 2024 was 112,000 people. So we brought on 700 new apartments for 112,000 people coming. And I don't have the numbers on the amount of houses that were built, but it's nowhere near enough. I don't know if you do, but it's nowhere near enough. It's crazy.
It's mind-boggling. And the scary thing about all of this is that vacancy rate is going to continue to drop, because we can't just turn supply on overnight to fix that challenge that we're facing. Well, opportunity for us as investors, right? So that's going to be, I think Melbourne's going to be undersupplied for some time. And you mentioned, the migration rate, population growth, between, again, Sydney and Melbourne have always led the charge historically in terms of net overseas migration. Between now and 2030, Melbourne will have the highest annual growth in overseas migration, and that's the first time that's ever happened as well in Australia.
Wow.
So, there's a lot going on. Like, Australia's growing rapidly. I was mentioning to you, you and I were chinwagging last night, and last 12 months in Australia, we've had a population increase by net overseas migration larger than Canberra and Tasmania combined. In 1 year.
That's crazy.
It's 1 year, and the lion's share of that is pouring into Melbourne, Victoria, but majority obviously in Melbourne.
Right. And this is obviously important without teaching everyone to suck eggs. But supply is important because that puts pressure on the market, and then people fight harder and pay more for what's available, and the prices start to rise. We see rents rise. And so in a market, when you look at a property clock, and in a market, when you're talking about what are the signs that a market's beginning to move, we look for a couple of quarters of consistent capital growth. and we've already had our first quarter of growth in Melbourne. It was 5%, which doesn't sound like a lot, but it was actually the highest quarter out of all of the states, wasn't it, I believe? And then we start to see supply contract and we start to see rents rise. And we're just beginning to see the first signs of that with vacancy rates dropping really low. Then think about what Riley said about the Brisbane market. He said one of the things that was introduced was the first homeowners grant, right? It was at 25K. Now, they haven't put any first homeowner incentives, or they have?
No, it's coming next year. So next
Oh,
year,
next year, yeah, but
yeah.
not at the moment, yeah.
Not at the moment. That's right.
Yeah. But they have rolled out the stamp duty concessions, right?
Correct.
And that is quite substantial, the stamp duty. Like that can save you anywhere between 30 to 50, 60, 70 grand in your purchasing costs. And so we're already seeing some stuff that's going to drive the market, some stuff that is going to, especially for investors, because it includes investors, yeah? And so as an investor, you can really save on your stamp duty concessions. Your stamp duty with these concessions, which is, it's massive for your
Huge.
in-out costs. You look like you want to say something about that.
No, I was just going to say, like, if you were to, the way I look at it again is we're being incentivized at the moment to invest in newly constructed real estate in the
Yep.
Melbourne market. And, simple
Which we
maths,
need.
if I'm
Yep.
correct, and if I was going to go buy a $800,000 asset today that was completed versus one off the plan, and I'm taking advantage of these stamp duty concessions, I'm making 4% going in on the deal by way of that concession. So that's pretty powerful.
Yep.
Especially then, you're buying time in the market as well. So, depending on your strategy, there's some real appeal going off the plan in the Melbourne market at the moment.
Yeah, no, 100%. And I'll just add that Melbourne has won, even though nobody believes us in Melbourne,
Yeah.
but we have just won the fourth most livable city in the world. So I know there's a lot of you out there that hate on Dan Andrews, and I'm not going to comment on anything political. I'm not letting you know where I stand on that. It'll be we won't even go there. Far too dangerous for a podcast. But despite the stuff that has affected sentiment, because I want to talk about the stuff like the land tax, the additional land tax, because that scares people, right? People think, oh my God.
It does.
And I've just bought in Melbourne, so I'm taking my own medicine. I literally just settled on Tuesday a new property for myself in Melbourne. And yes, there is a small amount of stamp duty. My property that I just settled was 1.2 odd, 1.3 million. And the stamp duty that I'm going, not stamp duty, the land tax that I'm going to pay on that is an additional $986, folks. So we have to put these things in perspective. Yeah.
Clickbait. It's clickbait. The media get a hold of something and, if it's, what's the old saying? If it bleeds, it leads type thing. And that's really the mantra of the media. Because if you look at the actual cost of what that looks like in stamp duty, and I've heard land tax, and I've heard it as well, people not taking action because they hear the rhetoric, well, I'm just going to be paying land tax in Melbourne and I'll turn my nose up at the market. And if I was looking at a unit today, the land tax I'd be paying on that asset would be around about $700 per year. Like it's nothing in the real scheme of things. No.
And it's tax deductible, Riley.
This is it.
It's tax deductible.
Yep, it is. And then you have to look at, okay, well, for my $800,000 purchase price, where can I get the best quality of asset in terms of position and suburb? And is it Melbourne? Is it Sydney? It's definitely not Sydney for 800,000. I can tell you that much. But
what would you get in Sydney for 800,000? You wouldn't even get a one bedder near the city.
Well, there's some areas out in the northwest corridor that you can still get a 2-bedroom unit for circa 700,000, which I think is still good buying because Sydney's just literally about to hit $1 million in the median
Mm,
unit price as well.
mm.
So I think there is actually some good value in that. You've probably got about 6 months of runway in that space, but yeah, for the greater part, Sydney's $1 million plus play.
Mm,
Um,
mm,
but
great
yeah,
stuff.
land tax shouldn't be anything to scare people, and
Yep.
I'd be conservative in, when I'm preparing the investment reports for our clients, that
Yeah.
I sort of add a bit of fat to the land tax as well in our calculations. And you hit the nail on the head. It's, at best, when you're buying a house and land package with a larger land holding, you're probably looking around about $1,400 per annum. Whereas if you read the article on news.com, you'd be scared and run for the hills. Yeah.
Well, if everyone's scared and runs for the hills, it just means more for you and I, Riley. But
Yep.
but we do like to have a thriving market, and
Mm,
it's really important that we see things for what they are and we actually understand the numbers.
mm,
And Jason Witten, I often credit him with some of the best sayings that I've taken on, and one that I always use that he taught me was be specific for me. And
mhm,
so when someone says, "Oh no, I don't want to pay the land tax," well, be specific for me. How much land tax are you paying? And
mm,
then once you claim back in your tax everything that you can claim, what is your net result? Because often we just get so lost in the emotion and the frustration because it is frustrating. I mean, I would love to not be paying that. Let's be real.
mm,
Can I invest in another state and not pay that? Yes. Can I invest in another state with a price point of anywhere between, let's say, 700 to $1 million and get really good quality real estate, really well positioned?
mm.
It's getting tough, right?
It
Can't do
is.
it. I mean, it's 850 minimum in Brisbane now for decent house and land, and you're miles out. You're nowhere near the CBD, like the
Correct.
best.
Yep.
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 You're looking at $1 million.
Mm,
And Sydney, we know Sydney. You said there's a couple of pockets of opportunity, but you really need to know your stuff once again. You're a local Sydney
correct.
lad, so you know
Yep.
Sydney.
Hmm.
And so then it's like, well, all right, so where do we go for the best bang for your buck? We go Melbourne.
Mm,
There's
mm,
a couple of twists to it because nothing's ever for free when you're investing. There's always a twist and a trade off. There's upside and trade off.
mm,
But you are getting in at nearly bottom of the market, which means
mm.
that you've got that whole upswing to go with all of the pressure that's been building up pre-COVID and all the supply issues that aren't being resolved, which is going to keep the pressure on the market. I know I'm telling you what you know.
No.
But I just want to really, really, really drum it home for people. So in Melbourne, you have the opportunity to buy for position, to be in a market where you're going to be able to get rent increases at some point in time, well, closely at some point in time, and a market that should deliver some good capital growth. The challenge is that we don't control when that happens. So often it might be like Brisbane, where we think we're getting in at the bottom of the market, and then there's a flood that affects 1% of the Brisbane market, but the whole Brisbane market tanks because sentiment gets in the way, right?
Yep.
So all we need is a politician, let's just say that, we don't have to name names, a politician to do one more stupid thing and then the market will go flat again for another year. However, that just means more opportunity for you and I.
Totally. Totally. And
Mm.
I think from the acquisitions perspective, I love working in the Melbourne market, and I
Mm.
love working in a market
Yeah.
where we're at the bottom of the market. And the reason why I love that
Yeah, I was going to
is
say why.
because we can turn the screws on the vendors. Like, we can negotiate the best deals for our clients, and
That's great. Mm.
it's awesome. We've got some serious leverage at the negotiation table with our
Mm.
vendors, and we've got over 7,500 clients, and
Mm.
that gives us serious leverage, and we use that with all the weight we possibly do. And
That's awesome.
we have got some awesome deals at the moment in the
Mm.
Melbourne market, similar to what we saw in Brisbane 2018, 2019
Yeah.
to 2017, where we've got, obviously, you mentioned stamp duty concessions,
Mm.
we've got cash rebates. I negotiated a deal with Sam over the last week, Tab, where it's a townhome development which is 10 kilometres from the CBD in Melbourne. It was all built and designed for owner occupiers.
Ooh.
30 of them have already been sold to the local market at 1 million, above 1.1 million. We negotiated the price down to 895 to 950,000. I've got 5 mortgage bank valuations anywhere from 75 to 180k over purchase price. So an investor can
Did
literally
I
walk
say?
in. Yeah, yeah. So literally an investor can walk in,
And make
make nearly
80 to
200k. It's
150k.
crazy. It's madness. And I just think there's some really good
I'm
value in the
looking for
Melbourne
one more.
market. Well, come see me, Tab, because I've been on a rampage of late because I see the
Yeah.
market moving too. I see
Yeah.
the early signs. You mentioned the vacancy rate. The auction clearance rate is starting to pick up momentum, and it's now just hovering just below 70%.
Right.
Once it gets above 70, 75%, really now that's market starting to take action. And going back to my Brisbane analogy and where I see similarities, I see Melbourne really going to go on a turbocharge of growth. One, because the value perspective, like
Mm.
it's got to move.
Yeah.
And two, you look at Brisbane, that influx of first home buyers,
Yeah.
come next year, the new government incentives for first homeowners is going to kick in. And now, as a first home buyer, in Melbourne today, if you want to take advantage of the first homeowner grant and only use a 5% deposit, you're capped up to $600,000 an apartment, and you're capped up to
Yeah.
$750 for a house and land.
Yeah.
Come the 1st of January next year, there's no more cap. So you can buy $1
Is that
million
right?
house now, yeah, with a 5%
No more
deposit.
cap.
No more cap on price point. So what's that going to do? That's going to improve market sentiment. That's going to bring in the first home buyers where they can buy in, let's say, South Kingsville, 8 kilometres from the CBD, where you can still buy for 850.
It
And
is.
it's just going to, and then you factor in the supply, we factor in the population growth. One of the other things I'd mention too, Tab, is the infrastructure.
Hmm.
Every time infrastructure's been spent, real estate nearby has benefited massively from that. And you look at Sydney, when the metro station went in, all of those suburbs skyrocketed. If you look at Brisbane, when that infrastructure started to pour in, all of those suburbs started to pour in. And at the moment, there's 100 bill being spent in Australia, across all of Australia. 30 billion of that is going to Victoria, and majority of that's going to Melbourne. So
Hmm.
it is a
Crazy.
suburb by suburb marketplace, but we tend to focus on areas where you've got, you know, the Melbourne Metro going in. That's a $15 billion infrastructure project. The
Yeah.
Westgate Tunnel. So suburbs that can benefit from that infrastructure that's going in, they're going to grow in value, pretty
Of
quickly.
course.
So we're actively targeting those areas at the moment. The acquisition team, we have been for the last 12 months. And I think 2026, 2027, well, Melbourne will overtake the
Mm.
Perths and the Adelaides of the world again, and then normal shall return.
Yeah, we'll be back where we should be. Sydney,
100%.
Melbourne.
Yeah,
Well, really, it should be Melbourne, Sydney.
well, how can that be? What did you say? The fourth most livable city in the world. That's
I know.
crazy.
The other cities
Yeah,
don't rank. It's
no,
like, come on,
yeah.
guys. It's crazy value.
It
I
is.
think PRD had an article out recently saying that Melbourne's got the most affordable suburbs out of any capital city in Australia. So the rhetoric just keeps coming out, and what we see in a market where the market is beginning to turn is the media get in on it. And so we're
Mm,
actually probably sitting at about 7 o'clock on the property clock now, somewhere between 7 and 8, because we've already seen supply contract. We've already seen a quarter of positive growth. We're seeing the media jump on now. And when the media jumps on, they start jamming it, right? They're like, oh, in Melbourne's where everyone's investing. Melbourne's got the cheapest property. Da-da-da-da-da. It's not sitting where it should. It's the lowest out that it's ever been in 20, 30, 40, however many years. And you start to get all of this noise coming out. And this is when mums and dads and your less educated investors start to pay attention to the news. They start jumping in and the market kicks off. Rents then increase. First home buyers go, I'm not paying this rent when I could have a mortgage. Enter 2026 and the cap gets removed from first home buyers. First home buyers jump in, banker, mum and dad come to the rescue, and the market is off to the races. And that's what a market looks like when it starts to shift. So all of those signs are coming. Anything else that you wanted to add on that?
Interest rates. There's
Yes.
there's
How could
another
we
massive
forget?
motivator. Like we're going to see some more rate drops, and
We
like
are.
Sam said, when money flows, property grows, and it's that simple. It's I
Yep.
think it was the stat I read was the last three times we saw a rate drop by a point, the market grew anywhere from 10 to 15% in that period of time.
That's crazy.
It's
Yeah.
crazy. So now look at yeah, I just think Melbourne's in for a hell of a ride. As soon as sentiment comes back, and you mentioned the media is now jumping on board, and
Yeah.
we have a bit of an internal banter behind the scenes where we sort of, beat our chests that oh, the media's come to the party. They're usually 12 months too late. We
Yep.
saw this in Brisbane play out, and we can see the writing on the wall in Melbourne. And I think now 1/3 of homes across Australia are over $1 million. You can still buy quality assets in the Melbourne market
Yeah.
well below that.
Yeah. Crazy. Well,
Crazy. Exciting times. Exciting times.
yeah, exciting times. So if you can get into the Melbourne market, folks, make sure you add that to your portfolio. You won't regret it. I think Melbourne's in for a good ride. Sam's behind it. Everything we've seen behind it. All the people that we talk to in the market are behind it. Some of the biggest developers that spend the most on research more on research you could ever, it's mind-boggling. Dr. Andrew Wilson, all the economists, all the rhetoric out there is very, very positive on Melbourne. And I guess just to remind everybody that as much fun as it is to be involved in a market and to make short-term gains, property is a long-term investment. And so sometimes we jump on these things and then the market takes a bit longer to go, or it goes up and then it has a little bit of a correction, it goes up again. It can do all kinds of stuff. There's stuff that's happening globally that people are concerned about. There's a lot of stuff we can't control. What we can control is our emotions and what we do with our investing and the action that we take. Take a long-term approach and you'll be fine. You've just got to be able to hold it. And that's really the key. Be in the market for at least 10 to 15 years with any property that you purchase and you will love the results. I think. Anything else to add on that, Riles?
No, that's perfectly summarised, Tab, I believe. I think, hopefully Melbourne doesn't get hit with a cyclone like Brisbane and a flood.
Don't curse
But,
us.
but no, I think the writing's on the wall, and
Yeah.
very exciting times for Melbourne. So, but no, thank you very much for having me, Tab. It's been awesome.
Thank you. No, thank you so much, Riles. Been an absolute gem, and thank you for letting me twist your arm. Wonderful. That's it for me for tonight, folks. And we will see you next podcast where I get to, I'll do a little prep for it. I'm interviewing a lovely fellow called Scott Brunsden, who is from a company called Depreciator. He believes depreciation is boring and that everyone knows everything they need to know, which I actually don't agree. He's got some hilarious stories and he wants to tell us about some of his own investment journey. He said he's got some very funny property stories. So, yes, keep an eye out for the next one after this as well. But a big thank you to Riles and the acquisitions team and all that you do for us. And I'm going to come and talk to you about that property and annoy you with another expression of interest.
Awesome.
Thanks, guys. Bye.
Bye for now.
Hey, thanks for listening to Property Investor Tales. Remember to subscribe so you get notified every time a new episode drops. As you can guess, I love hearing people's property investor tales. So if you'd like to share yours, then please get in touch with me via email at propertyinvestortales@positivementor.com.au. We would also love your feedback, and I would appreciate a 5-star review over on Apple Podcasts or Spotify. Remember, you can watch all of these podcasts over on YouTube at Positive Mentor or at positivementor.com.au. Until then, take care, happy investing, and bye for now.